All right, we're back with our second question, and I'm actually going to combine with the third question because these two questions are often asked and can be answered together. So the question is, why are currency always in pairs? So why do we always trade, euro dollar or dollar Canadian, and how to read exchange rate? Now this is such a very simple but very important questions, and even a lot of veteran traders still confused, including myself, because a lot of time we are trading the market. You're so used to just trading the game. Now you forgot the most basic one. So why does it always trade in pairs? It's because you are always, unlike the stock market, right? I always use it to compare with stock market because I think that's what most people are used to, and most people are have relative some knowledge about it. So in the stock market, if you buy a share of Apple, you basically use your money exchange for the share in the Apple company. Now in currency, you are actually use money to exchange for another money. So you're not, there's no product, right? So that's why you always have to trade in pair. Because when you say, okay, I'm gonna buy some US dollar, you actually gonna bring your own currency. Thinking about that, you're going to US for traveling, for vacation. You always bring your home country currency to there, right? Maybe if you're from Japan, you bring some Japanese yen to your local currency exchange and say, hey, can I exchange some US dollar? So essentially, you are buying the US dollar and selling your Japanese yen. And that's why currency pair currency is always trading in pair. So essentially, when you say I'm buying euro dollar, you are actually buying euro and selling dollar. So if you say I'm selling euro dollar, you are actually buying dollar and selling euro. So how to read it is that you'll always have one currency in the left side, and there's a dash in between, and another currency in the right side. So if euro dollar, you have a euro dash. Sorry, it's not a dash. It's like a slash and a dollar. So the currency in the right side is always the base currency. It's always the price that you pay. So thinking about this, the currency in the left side is always the product, and the currency in the right side is the price. So if you're buying euro dollar, the left side is euro. That's a product you're buying. You're buying the euro dollar. With what? With US dollar. The currency in the right side is the price that you're paying. So for example, if we say you're buying dollar yen, then the one in the left side is US dollar, which is a product you're buying. With what? With a Japanese yen. So if you say, I'm going to buy dollar yen, you're buying US dollar with Japanese yen. Vice versa, if you are buying Australian Aussie, you're buying Aussie dollar, you're buying Australian dollar with US dollar. So again, the currency that's in the left side is the product you're buying, and the currency in the right side is the price that you are going to use to buy that. Now, that's for loan, for buy. So when we say sell, short sell, it's just reverse it. So if we say, buy euro dollar, it's you are buying euro, selling dollar. Selling euro dollar is you are selling euro and buying dollar. That's it. It's nothing really complicated, but it does confuse people sometimes. Especially, I think they quote it differently. If you go outside to any exchange, local exchange, they often just give you the quote. And that's because everything is quoted against your local currency. So, for example, I'm from Canada. If I go into any local currency store, they will always just tell me, US dollar is 96 cents. What does that mean? Or like 85 cents. That means it takes 85 cents of US dollar to buy 1 Canadian dollar. And that's why when you see those electronic board in the local currency, they will just have one single digit of one currency pair. but that's because you are always exchanging your own local currency to that currency. And again, very easy way to remember, the currency in the left side is the product, the currency in the right side is the price you are paying. So the right currency in the right side is the quote currency, and the currency in the left side is the base currency. I think I'm start confusing you a bit, but just remember the one in the left side is a product. It's whatever you're buying. So Aussie dollar, you're buying Aussie. If it's dollar yuan, you're buying US dollar. If it's CAD yuan, you are buying Canadian dollar. And the one in the right side is the price that you're paying. And that's it. And just remember that the only thing you have to really, in terms of trading, to remember is the correlations. Because if you are, buying euro dollar, and if you are buying euro dollar and you say, you buy euro dollar but you selling dollar yuan, then essentially you are selling dollar twice, right? So you have to remember this. Although it does look like completely different currency pair, one is euro dollar, the other one is dollar yuan, but if you're buying euro dollar, essentially you're buying euro, selling dollar, right? And if you're selling dollar yuan, you're selling dollar again. So you're selling dollar twice, US dollar twice. So that means if anything happened to the US dollar, it will compound in your trading result. So just to keep in mind when you trade, and make sure you are not, you can do correlated, it's fine. I'm just making sure you taking that into your risk management. So I understand that sometimes it's completely two different currency pair, but you have to understand if you are buying the same currency or you are selling the same currency. That's the thing you need to take in consideration. Other than that, it's fine if you get confused. Sometimes I still get confused. I still have to refer back to my, to my note. And that's it. If you have any other questions, just feel free to ask me. Otherwise, I'll come back with question number 4 and 5. Thank you.